Stocks opened Thursday's trading day mixed. The dollar weakened against the euro, largely amid clues from the Federal Reserve in its minutes report released on Wednesday that a rate hike during the central bank's June meeting is unlikely. Investors are now looking at September for an announcement on higher rates, and some analysts say banking stocks could see greater profits as a higher Fed funds rate would allow banks to charge higher interest rates on loans. So let's discuss this and analyze the rest of the markets with Ian Weiner, head of equity trading at Wedbush Securities, with us now from Los Angeles. And Ian, what was your reaction to the minutes? Any takeaways you found interesting?
Well, I think the most interesting takeaway is just that the policy seems to continue to be dovish. And it certainly seems like they're not seeing any indicators on the inflationary front to concern them. And as far as the overall employment levels, there's still concern there as well. So I think people came away feeling no June hike, and even September is going to be a question mark.
September is going to be a question mark. So does that push a rate hike potentially into 2016?
Most certainly. There's no reason why. If you go by the two benchmarks that the Fed has put in place, you could argue employment's better, but the wage growth, you're not seeing any of that. And then as far as inflation, there's just no sight of that either. So what you've seen over the last couple of months are actually weaker economic data points on balance. And so just based on that alone, it doesn't seem like there's any sense of urgency, or needs to be, for the Fed to raise rates, even this year.
All right, and amid the likelihood of a rate hike at some point soon, I mean, what do you make of the banking sector? Is now a time to get in? Any names you like?
Well, I think people are certainly buying those stocks for two reasons. One, clearly what you mentioned in the net interest margin that they'll be able to charge will grow. And secondly, the capital markets are very good. I think if there's one name, you go with JP Morgan. It's the best of breed. It's got the best manager on Wall Street, and I think that's the one you stay with.
All right, what about this notion of sell in May and stay away? I mean, historically, the markets haven't performed as well during May to November, hence the adage. But what are you telling clients now 3 weeks into May?
Well, I mean, if you're going to sell stocks, I don't think sell in May and go away is a reason. I think that's as arbitrary as any other reason to do things. So I don't pay too much attention to those sort of historical trends, because I feel the sample size isn't big enough to really make a great conclusion. I think in general, though, and I've said this before, I think you just have to be very, very clear about what you own. I mean, if we've learned anything over earnings season, it's that certain stocks, if they don't perform up to speed, people are going to get very hurt. So I think people, if they stick with what they know, like Home Depot, like Target, those kind of names should outperform and continue to stay sort of steady. It's the other more speculative stuff that you need to be very careful if you look at some of the action in Etsy and Twitter and LinkedIn.
All right, Ian Weiner, we have to leave it there. Head of equity trading at Wedbush Securities. Ian, thanks for joining us.
Thanks, Scott.
I'm Scott Gamm, and you're watching The Street.